From notable policy rate reductions to faster than expected decline in inflation, we bring you the latest economic updates for the month of September 2023. Hi, I'm Tharsha Ashoka and welcome back to the First Capital Monthly Economic Watch. The Central Bank of Sri Lanka resumed interest rate to support economic growth. At the meeting held on 4th October 2023, CBSL decided to reduce the standing deposit facility rate and the standing lending facility rate of the central bank by 100 basis points to 10% and 11% respectively. The Monetary Board believes that with this decline in policy interest rates, combined with the substantial relaxation of monetary policy measures implemented earlier, which include directives to licensed banks from the central bank to lower interest rates and the notable decline in risk premiums on government securities, will accelerate the decline in market interest rates, especially lending rates in the upcoming period. Moving on to the government securities side, the secondary market opened the month with subdued sentiment as investors held back as they awaited clarity on the interest rates movements. As the week progressed, the market saw mixed sentiment on the bond auction maturities of 2026 and 2028, which traded consecutively throughout the month. During the month, CBSL conducted 2 bond auctions, both of which were fully accepted with weighted average yields marginally trimmed down. Meanwhile, at the bill auction, weighted average yields started to post a declining trend across the board, with 1-year bill lowering below 13.5%. In line with this, finance sector rates, including the AWPR, decreased further and recorded at 14.67% towards the end of the month of September, while interest rate spread declined to 1.3%. Moreover, private sector credit increased by LKR 5.5 billion compared to July 2023 due to the continuous dip in rates. Meanwhile, state credit declined after 2 months by LKR 90.5 billion relative to July 2023. On a year-on-year basis, private credit recorded a decrease of 6.8% and on a month-on-month basis, it is an increase of 0.1%. Looking at the inflation figures for the month of September, inflation continued to display a declining trend for the 12th consecutive month to 1.3% year-on-year, while month-on-month inflation marginally increased by 0.9%. Year-on-year inflation of food group decreased to 5.2% in September 2023 from 4.8% in August 2023, while non-food group decreased to 4.7% from 8.7% in August 2023. Analyzing the month-on-month inflation, the CCPI index increased by 0.9% month-on-month, contributed by the increase in expenditure of food items by 0.18% and an increase in expenditure of non-food items by 0.7%. Within the food items, increase in value changes were mainly reported for fresh fruits, rice, limes, big onions, and dal Mysore. Among non-food groups, increase in value changes were mainly reported in housing, water, electricity, gas and other fuels, transport and education. Looking at the NCPI for August 2023, NCPI significantly contracted to 2.1% year-on-year compared to 4.6% in July 2023. Meanwhile, foreign reserves reduced by $70 million from August 2023 to $3.5 billion in September 2023. Also, market liquidity displayed volatility and turned positive during the month of September 2023. In terms of the government securities, there were LKR 1.9 trillion worth of maturities during September 2023 and new issues through auction worth of LKR 990 billion, creating a deficit of LKR 882 billion. Also, CBSL holdings improved and recorded above LKR 2,800 billion as at the end of September 2023. Moving on to the external sector performance, trade deficit expanded and recorded at $307 million in August 2023 compared to a deficit of $261 million recorded in August 2022. In terms of exports, earnings from exports marked the highest monthly earnings in August 2023, yet on a year-on-year basis declined by 8.7% to $1.1 billion due to a decline in earnings from industrial exports, including garments, associated with slowing external demand, while there was an increase in export earnings of petroleum products due to the increase in volumes of bunker and aviation fuel exports. In terms of imports, import expenditure declined by 4% year-on-year to $1.4 billion in August 2023 as import expenditure of intermediate goods substantially decreased. On the other hand, consumer and investment goods reported an increase. Workers' remittances increased to $499 million in August 2023, increasing by 53.5% year-on-year, while earnings from tourism for August 2023 increased to $211 million from $68 million in August 2022. Accordingly, BOP for January to August 2023 recorded at $2 billion compared to January to July 2023 amount of $2.1 billion, resulting in a net outflow of $44 million for the month of August 2023. In terms of tourist arrivals, the total arrivals for the month of September was recorded at 111,938, displaying a year-on-year increase of 275% owing to factors such as the ongoing recovery of the tourism sector, improvements in air connectivity followed by China's recent reopening, and the strong pent-up demand for traveling following pandemic-related restrictions. The largest source market for tourist arrivals in September were India, China, the United Kingdom, Germany, and Russia. In terms of the currency movement, although LKR depreciated against USD on a month-on-month basis and stood at LKR 324.5, on a year-to-date basis, LKR strengthened against most of the major currencies, including USD, UK pound, and Euro, supported by improved socio-economic conditions. Finally, moving on to the global market, a negative sentiment persisted as most major indices were seen in the red zone during the month. So with that, we conclude the monthly recap for September 2023 and stay tuned for more updates in the future. Thank you.